There comes a moment in every trader's journey where they realize the charts were never the enemy. The setups were never the problem. The market wasn't unpredictable, unfair, or chaotic. The real battle was always internal. The real obstacle was the tilt, the emotional surge that blinds you, hijacks your logic, and convinces you to act out of fear, frustration, or hope rather than clarity. Trading psychology isn't some mystical discipline, and it's not a collection of motivational quotes. It's simply tilt management, the ability to recognize when your emotions have shifted your perception of risk, opportunity, and danger, and to bring yourself back to neutrality. Because only in neutrality can you see the market for what it is, not for what your emotional survival instincts want it to be. If you can learn to manage tilt, you can learn to trade, and if you can stay calm when the market moves against you or in your favor, you gain access to a level of consistency very few traders ever experience. Tilt isn't just an emotional reaction. It's a shift in your internal reality. It's the moment you stop seeing the market objectively and start projecting your fears, your losses, your past experiences, and your need to win onto every tick. When you tilt, you stop trading the chart and start trading your emotional history. You must understand something essential. The market is neutral. It has no intent. It does not seek to hurt or reward you. Tilt is your mind interpreting random price movement as something personal, as if the market is responding to you. That illusion is the very root of emotional pain in trading. Tilt management is the discipline of not allowing your internal narratives to replace the truth of the chart. When your mind tilts, you feel urgency that doesn't exist, threats that aren't real, and opportunities that aren't actually there. And the moment you begin trading from the emotional world rather than the real one, you cut yourself off from probability, the only thing that gives you long-term consistency. Managing tilt begins with awareness. You must become intimately familiar with your emotional signature, the tension in your chest, the rush in your mind, the impatience, the pressure, the fear of missing out, the anger after a loss. These aren't random emotions. They're signals that your perception is shifting away from objectivity. When you ignore tilt, you may believe you're making conscious decisions, but you're not. You're being driven by emotional momentum, and emotional momentum is always faster than logic. Tilt convinces you that this time is different, that this trade must work, that you have to make back what you lost, that you can't exit yet because the market should reverse. Tilt always uses the language of urgency and justification. Neutrality uses the language of clarity and probability. The real skill of a trader is learning to pause before tilt takes over, to breathe before urgency builds, and to ground yourself before you start reacting to phantom danger. The moment you return to neutrality, you regain your edge, not because the market changed, but because your perception became clear again. Tilt management is not suppression. It's not about fighting your emotions. Fighting tilt is tilt in disguise. The moment you resist an emotion, you give it more power. True mastery comes from acknowledging emotions without giving them control. You observe them the same way you observe a candle forming, without judgment, without personal meaning, without attachment. When you can look at your own fear the same way you look at a price retracement as information, not a threat, you break the cycle of emotional trading. Tilt also emerges from expectation. Whenever you demand certainty from an uncertain environment, you tilt. Whenever you try to control an outcome instead of simply executing your edge, you tilt. Whenever you expect the market to reward your patience, your discipline, your analysis, or your effort, you tilt. Tilt is the emotional resistance to uncertainty. The solution is acceptance. Acceptance that every trade is uncertain, that outcomes are distributed randomly, and that your job ends the moment you execute your plan. The moment you release attachment to the outcome is the moment your trading psychology transforms. Because without attachment, tilt loses its fuel. A trader who manages tilt doesn't need to force discipline. Discipline emerges naturally from clarity. They don't need to fight the market, they work with probability. They don't need to chase revenge trade or fear missing out. They trust the long-term distribution of their edge. Tilt management is the real trading psychology because it's the gateway to consistency. Without it, strategy doesn't matter. With it, even simple rules can produce exceptional results. Neutrality isn't an emotion, it's a trading state. And once you learn to operate from that state consistently, trading becomes easier, calmer, and more predictable, not because the market changed, but because you did. Tilt is the invisible force that quietly steals your ability to trade objectively. It doesn't shout, it doesn't warn you. It simply shifts your perception 1 inch at a time until what you're seeing on the chart is no longer what's actually there. It's an emotional distortion, an internal bending of reality that turns probability into a threat, opportunity into danger, and randomness into something personal. Traders spend their lives searching for strategies, indicators, systems, and patterns, but the truth is brutal and simple. None of it works consistently if tilt is in control. Tilt begins the moment your emotional brain interprets a price movement as something meaningful to your identity. A loss feels like you're being attacked. A win feels like your worth is being validated. A missed trade feels like you're falling behind. A drawdown feels like failure. The market becomes a reflection of your self-image instead of a neutral environment. At that moment, your ability to engage with probability collapses. Tilt takes over the driver's seat. What makes tilt so dangerous is that it's subtle. It doesn't always feel like rage or panic. Sometimes it feels like urgency, sometimes like pressure, sometimes like a quiet discomfort that makes you click just one more time, tighten a stop, or hesitate on a perfectly good setup. Every trader knows the feeling, when your hand is clicking before your mind fully understands why, or when your mind freezes even though your plan tells you exactly what to do. These are not mistakes of logic. These are emotional distortions reshaping your perception. Probability requires clarity. Tilt destroys clarity. When you tilt, you stop thinking in terms of what could happen and start thinking in terms of what must happen for you to feel okay. You're suddenly no longer trading the system. You're trading your emotional needs. You're trading to repair a feeling, to restore confidence, to avoid discomfort. And the moment you start trading to manage your emotions instead of managing your risk, the game is already lost. Probability is the acceptance that anything can happen. Tilt is the refusal to ACC. Eapt that reality. That's why tilt is so powerful. It makes you fight uncertainty, even though uncertainty is the foundation of trading itself. Tilt is a survival instinct. When the mind perceives threat, it tries to protect you. But the market is not a jungle. The market is not attacking you. The danger is psychological, not physical. Yet your mind responds to drawdowns, volatility, and loss exactly as if you were facing real physical harm. So it launches emotional defense mechanisms: urgency, denial, fear, anger, frustration, aggression, justification, overconfidence, despair. Tilt is simply your survival brain trying to protect your ego from pain. But in trading, that protection is poison. Because the only way to succeed is by embracing uncertainty and operating within probability. Tilt strips you of that ability. Tilt disconnects you from probability in several predictable ways. First, it shifts your time horizon. A trader who normally waits for confirmation suddenly sees danger everywhere and rushes into early entries. Or a trader who normally takes clear setups suddenly sees them as risky because their mind is stuck in a recent loss. Nothing changed on the chart. The change happened inside the trader. Second, tilt distorts meaning. A simple retracement becomes a threat. A breakout becomes an invitation to chase. A losing trade becomes evidence that something is wrong with you. A winning trade becomes a reason to become overconfident. These meanings do not exist in the market. They exist only in your emotional narrative. Third, tilt destroys consistency. Consistency requires acting the same way in repeated conditions. Tilt makes your actions inconsistent because it changes how you interpret those conditions. What looked like an A-plus setup yesterday suddenly looks dangerous today. Why? Not because the chart changed, but because your emotional state did. Fourth, tilt breaks trust. Trust in your rules, trust in your edge, trust in your ability to execute. When you don't trust probability, you try to control outcomes. And trying to control outcomes in a probabilistic environment guarantees frustration. The more you try to force the market into certainty, the more the market resists, and the deeper your tilt becomes. Tilt is self-feeding. Once it begins, it grows. One emotional decision leads to another. One urge to chase leads to an urge to double down. One hesitation leads to 2 missed trades, which leads to frustration, which leads to revenge trading. A trader rarely blows up from one bad decision. They blow up because one emotional distortion triggers the next. Tilt becomes a chain reaction. This is why managing tilt is the foundation of real trading psychology. It's not discipline, it's not motivation, it's not willpower, it's awareness, the moment you recognize emotional distortion before it becomes action. If you cannot recognize tilt early, nothing else matters. The best system cannot save you from your emotional impulses. Tilt management begins with understanding your internal cues. Every trader has a personal tilt signature. For some, it's a tightening in the chest. For others, it's that restless urge to do something. For some, it's anger. For others, numbness. Tilt often begins with the smallest sensations, small enough to be ignored. But if ignored, they expand until they dominate your decisions. Mastery comes from noticing those sensations immediately. When you can identify the beginning of tilt, you gain the power to interrupt it. You reclaim the gap between impulse and action. That gap is where probability becomes possible again. Tilt management is also acceptance. Tilt thrives on resistance, resisting a loss, resisting discomfort, resisting uncertainty. The more you resist what the market gives you, the more distorted your perception becomes. Accepting uncertainty doesn't mean liking losses or enjoying discomfort. It simply means not fighting the nature of the market. When you stop resisting uncertainty, tilt loses its trigger. Another critical aspect of tilt management is detaching from outcomes. Tilt doesn't come from the trade itself. It comes from what you need the trade to mean. If you need a win to feel confident, one loss triggers tilt. If you need a trade to work to feel competent, one mistake triggers tilt. If you need the market to reward you for your patience, any retracement will feel like an attack. When you detach your identity from your outcomes, trades lose their emotional weight. They become data points, not judgments. And when trades become data, probability becomes accessible again. Tilt management is not about stopping emotions, it's about not letting emotions distort your perception. You don't need to eliminate fear, you need to stop interpreting fear as information. You don't need to eliminate frustration. You need to stop letting frustration convince you that the market is wrong and you must make it right. Neutrality is the true state of a trader. Calm, present, observant, unattached. Tilt is the enemy of neutrality. And every moment you spend tilted is a moment where your edge is compromised. Some traders think psychology is about staying positive. That is a misunderstanding. Trading psychology is about staying clear. Tilt clouds everything. Clarity reveals probability. Some traders think psychology is about controlling emotions, but controlling emotions aggressively only amplifies tilt. The tighter you try to hold yourself together, the faster you crack under pressure. Some think psychology is about confidence, but confidence built on outcomes is fragile. One bad trade can shatter it. True confidence comes from trusting the process, not because it always works, but because you understand the nature of probability. Tilt management is the real essence of trading psychology because it keeps you aligned with how the market actually works. The market operates on uncertainty, randomness, and probability. Tilt operates on fear, expectation, and emotional narrative. One is reality, the other is illusion. When you learn to manage tilt, you begin to see the market without distortion. A losing trade is simply part of the distribution. A winning trade is simply evidence your edge is functioning. A missed move is simply another moment, an endless opportunity. Nothing becomes personal. Nothing becomes urgent. Nothing becomes threatening. With tilt neutralized, trading becomes a series of objective decisions, not emotional reactions. Patience becomes natural. Discipline becomes effortless. Consistency becomes automatic. Because when your perception is clear, your actions naturally align with your rules. Tilt management is not a skill you master once. It is a lifelong practice. Markets never stop presenting uncertainty and challenge. Your job is to never stop returning to clarity. Once you learn to manage tilt consistently, you unlock the true potential of your trading. Not because you become perfect, but because you finally stop fighting yourself. You finally stop trading from emotional distortion. You finally stop letting survival instincts dictate probabilistic decisions. You begin trading with a mind aligned with the market's reality. And that is when probability becomes your greatest ally, consistency becomes your identity, and the market becomes a place where clarity guides every action you take. Every trader wants to believe their mistakes come from the market. It's easier that way. It feels comforting to blame volatility, manipulation, news events, institutions, random spikes, unexpected reversals, or technical glitches. But the truth is far more uncomfortable and far more liberating. The market is never the cause of your mistakes. The market doesn't make you chase. It doesn't make you hesitate. It doesn't make you revenge trade, oversize, exit too early, or hold too long. The market simply moves. You respond, and the quality of your response is determined entirely by your internal state. At the core of every mistake is tilt, an emotional shift that disconnects you from clarity and makes you act in defense of your ego rather than in alignment with your strategy. Tilt is a psychological mechanism designed to protect you from emotional pain. It wants to shield you from feeling inadequate, from feeling wrong, from feeling out of control, from feeling vulnerable. The market has no intention. Your ego does. When you make an impulsive entry, it wasn't the chart that forced your hand. It was a tilt state responding to the fear of missing out. Fear that your opportunity is slipping away. Fear that your edge won't appear again. Fear that you might have to sit in uncertainty longer than you want to. And that tilt state pushes you to act prematurely, because in that moment, taking action feels safer than waiting. When you hesitate on a clear setup, it wasn't because the setup suddenly became invalid. It was your ego trying to protect itself from the possibility of being wrong. Hesitation is nothing more than fear wearing the mask of caution. It's an emotional stall tactic, a way for your mind to avoid the discomfort of uncertainty. Your ego whispers, "Let's wait a little longer just to be safe," but what it really means is, "I don't want to feel the pain of a loss." Oversized trades are a classic example of ego-driven tilt. Oversizing doesn't come from logic. It comes from the illusion that increasing risk will accelerate validation. When you oversize, it's because some part of you needs the win to mean something more than a normal win. Perhaps you're trying to recover from a loss. Perhaps you're trying to prove you're skilled. Perhaps you're trying to erase a mistake or make up for missed opportunities. Oversizing isn't a strategy. It's an emotional plea for significance. Your ego wants the market to confirm your worth. Every oversized reaction, every frantic exit, every panicked entry, every sudden decision to break your rules originates from tilt, not from the price movement itself, but from your mind's interpretation of it. Your ego takes a neutral event and attaches meaning to it. That meaning becomes urgency. That urgency becomes action. And that action becomes a mistake. The critical thing to understand is that tilt is always trying to protect you. It wants to keep you emotionally safe. But in trading, emotional safety is often the opposite of strategic safety. The actions that protect your ego, avoiding losses, avoiding uncertainty, avoiding discomfort, are the same actions that sabotage your performance. Trading requires you to be vulnerable to uncertainty. Your ego despises that vulnerability. Mistakes don't come from what you see on the chart. They come from what you feel inside your mind. A trader with a clear emotional state can analyze the same chart and act with precision. A trader in tilt will act rashly, even if the chart hasn't changed. A trader with a calm mind sees opportunity. A trader protecting their ego sees threat. The ego interprets every loss as a personal failure. It interprets every win as personal validation. It interprets every missed trade as incompetence. It interprets every drawdown as danger. And because the ego attaches meaning to everything, it never lets the market remain neutral. It injects significance into randomness, and from that significance arises tilt. Imagine a scenario where a trader takes a perfectly normal loss within their plan. Rationally, there is no problem. The outcome was within expectation. Probability played its role. But if the trader's ego cannot accept being wrong, tilt activates. The tilt then leads to revenge trading. Revenge trading isn't about recovering money, it's about recovering identity. Proving to yourself that you are still good, still capable, still correct. You're not trading the market, you're trading your self-worth. Hesitation works the same way. When you hesitate, you're not analyzing, you're protecting your ego from risk exposure. You're trying to avoid the emotional pain of being wrong. But by hesitating, you only weaken your execution, create self-doubt, and reinforce the fear that caused the hesitation. It becomes a loop. Fear, hesitation, regret, more fear. And each cycle strengthens the internal tilt state. The market doesn't create these loops. Your internal state does. Another form of ego-driven tilt is the illusion of control. When you think you can influence, predict, or force the market into behaving a certain way, you're operating from ego. Tilt grows in environments where the ego believes outcomes should match expectations. When reality doesn't cooperate, tilt intensifies. You think, the market shouldn't have reversed here, or this trade should have hit my target. or it should come back, or it can't go any lower. Every should is ego. The market doesn't know you. It doesn't owe you alignment. It doesn't operate according to your needs. When you believe it should, you feed tilt. And tilt leads you to ignore stops, move targets, widen risk, or break rules, all to preserve the illusion that you still have control. Mistakes also come from expectation tilt, the belief that your effort, patience, or analysis should result in a certain outcome. When the outcome doesn't align with your expectation, tilt A activates instantly. You become frustrated. You feel cheated. You take trades you normally wouldn't. You deviate from your plan. You try to compensate. Every reaction is bigger than it needs to be because your ego is in pain. Tilt doesn't always feel explosive. Sometimes it feels like numbness. Sometimes like mental fog. Sometimes like exhaustion. When you're emotionally overloaded, your mind tries to avoid further pain by shutting down. This, too, is ego protection. But in trading, a quiet ego is just as dangerous as a loud one, because both make you act without awareness. The key to understanding tilt is realizing that it's never about the chart. It's about what you believe the chart means about you. A loss doesn't hurt because of the money. It hurts because of what you think the loss says about your ability. A missed move doesn't sting because you missed profit. It stings because you think it reflects incompetence. Drawdowns don't scare you because of numbers. They scare you because they threaten your identity. When you strip away ego, the market loses its power over you. You stop taking losses personally. You stop taking wins personally. You stop seeing trades as reflections of your worth. You see them for what they are, expressions of probability within a random distribution of outcomes. When there is no identity to defend, tilt has no purpose. Without purpose, it loses its grip. But as long as your ego is tied to your trading performance, tilt will always emerge. It will appear in moments of stress, uncertainty, excitement, fear, and anticipation. It will come disguised as logic, caution, intuition, or urgency. Tilt is a shapeshifter. It adapts, it infiltrates, it finds subtle ways to influence your decisions. To eliminate mistakes, you don't need more strategies. You need to disentangle ego from action. When you trade without ego, you act from clarity, not EM. Oceanal distortion. You make decisions based on probability, not fear. You execute from a place of neutrality, not self-protection. Every mistake you've ever made, every oversized position, every premature exit, every reckless revenge trade, every hesitation stemmed from the same place, a mind trying to defend its identity. Once you see this, trading transforms. The market no longer feels hostile. Losses no longer feel threatening. Wins no longer feel addictive. Everything becomes data. Everything becomes information. Nothing becomes personal. The goal is not to eliminate tilt forever. Tilt is part of human psychology. The goal is to recognize tilt instantly, before it becomes action. A trader who sees tilt as it arises has already neutralized it, and a trader who neutralizes tilt consistently becomes the kind of trader who can execute with precision, clarity, and calm, regardless of what the market does. Mastering tilt management is the moment trading stops feeling like a desperate struggle and starts feeling like a natural flow. Most traders don't realize how much of their trading behavior comes from an unending battle for control. Control over the market, control over outcomes, control over uncertainty, control over fear. The irony is that the harder you try to control something that cannot be controlled, the more tilted you become. And the more tilted you become, the further you disconnect from your edge. When tilt rules your mind, trading feels chaotic. When tilt is mastered, trading becomes calm, almost effortless, because you are no longer fighting a battle that was never yours to fight in the first place. Trading turns into chaos when you cling to the belief that control is possible. You begin trying to force outcomes that align with your expectations. You want your analysis to be right, your setups to behave the way you imagine, your entries to be validated. Instantly, your trades to move smoothly toward your targets. When the market doesn't comply, and it never consistently will, you experience a psychological rupture. You interpret market movement as threat or disrespect. Tilt rushes in to protect your ego, to restore a sense of safety, and the fight for control intensifies. But when tilt is mastered, you no longer require the market to behave in a specific way in order for you to remain emotionally stable. Control becomes irrelevant. You stop trying to bend the market into certainty. You stop projecting your needs onto random fluctuations. You stop reacting to discomfort by forcing trades. Instead, you execute your edge with neutrality, because neutrality is the only mental state aligned with the probabilistic nature of the market. Tilt management begins by recognizing that your need for control is rooted in emotional fear. Fear of loss, fear of being wrong, fear of missing out, fear of repeating past pain. When you feel these fears, your instincts tell you to take control. You click early, you add size, you exit too quickly, you move stops, you ignore rules. These are not strategic decisions. They are survival reactions. They give you a temporary illusion of control, but they destroy long-term results. Tilt distorts your perception so deeply that even simple setups start to look dangerous. You stop seeing the chart objectively and start seeing it through the lens of fear and urgency. A trader who masters tilt no longer acts from emotional survival. They accept that control is impossible. Their mind stops fighting the market. In this acceptance, clarity emerges. The market becomes neutral again, nothing more than a stream of information. Price movement loses emotional meaning. It stops being a threat. It stops being a validation. It simply exists. And when price movement loses emotional weight, your edge becomes excessive. Belief at a level you previously could not experience. Neutral execution is the natural result of three internal shifts: acceptance of randomness, detachment from outcomes, and trust in probability. These are impossible to access while tilted, because tilt seeks certainty, not probability. Tilt seeks safety, not clarity. Tilt wants to protect your identity, not your account. But once tilt is managed, these three psychological pillars become effortless. Acceptance of randomness frees you from the illusion that the market must reward your effort. When you truly accept randomness, you stop expecting the market to behave in ways that make you comfortable. You stop demanding that each trade deliver a specific result. You stop reacting emotionally to normal fluctuations. This acceptance is not resignation, it is alignment with reality. When you accept randomness, your mind no longer panics when the market behaves unexpectedly. You watch without reacting. You observe without attaching meaning. You understand that anything can happen, and because anything can happen, you remain flexible rather than tilted. Detachment from outcomes dissolves the emotional burden that causes tilt in the first place. A trader who is attached to outcomes needs every trade to behave correctly. They need wins to feel good. They need losses to be painless. They need every trade to confirm their skill. But a trader who is detached from outcomes sees each trade as one event in a distribution. They do not require the market to validate them. They do not need a trade to work out in order to stay mentally balanced. Without attachment, there is no emotional trigger. Without triggers, tilt cannot activate. And when tilt cannot activate, execution becomes clean and simple. Trust in probability is the heart of neutral execution. Probability is not guesswork. It's the recognition that your edge works over a series of trades, not individual trades. A trader in tilt cannot trust probability because tilt wants certainty now. Tilt wants each trade to be the one. But a trader who masters tilt can wait patiently for the long-term distribution to play out. They no longer view a losing trade as a failure. They no longer view a winning trade as proof of anything special. They see both simply as outcomes within a system. Because they trust probability, they no longer feel compelled to intervene emotionally. Their job is not to force the outcome. Their job is to execute the edge and let probability take care of the rest. When these three shifts take root, trading stops being an emotional roller coaster. The fight ends. The struggle disappears. Instead, you operate from a place of calm observation, calm decision-making, calm execution. The calm doesn't come from suppressing emotions. It comes from neutrality, a mental state where emotions arise but do not hijack perception. You feel them, acknowledge them, and let them pass without acting on them. Neutral execution is the most effective trading state. In neutrality, time slows down. You see the setup clearly. You know the exact moment to act. Your decisions become sharp, crisp, and decisive. You no longer wonder if you should take the trade. You simply take it because it matches your criteria. You no longer struggle with doubt. You know that doubt comes from tilt, not from logic. You no longer question whether the trade will win or lose, because you already accepted that the outcome doesn't define you. Neutrality creates a rare clarity where your mind is aligned with your system, and your actions reflect your true edge instead of your emotional impulses. This calm execution is not passive. It is powerful. It is controlled without being forceful. It is confident without being reckless. It is disciplined without being restrictive. You are fully present. You are aware. You are in flow. And because you are not fighting the market, you conserve enormous mental energy. Your account benefits from your calm, but so does your mind. Trading becomes lighter. It becomes sustainable. It becomes consistent. Tilt management also transforms your relationship with losing trades. A trader who still fights for control sees every loss as a personal failure. Tilt creates defensiveness, denial, and emotional compensation. But a trader who has mastered tilt sees losses as data. They accept them. They learn from them. They move on immediately. There is no fight, no ego, no resistance. Losing doesn't take mental space. Winning doesn't swell the ego. Everything becomes balanced. In this state, you no longer feel the need to fix the market or fix yourself after every outcome. You simply continue executing your rules. You know that the law of large numbers ensures your edge will express itself over time. You don't speed it up. You don't force it. You don't try to outperform probability. You simply align with it. Tilt management is not the elimination of emotion, it is the separation of emotion from action. You cannot prevent your heart from racing sometimes. You cannot prevent your mind from creating doubt. You cannot prevent fear from arising when your trade goes against you. But you can prevent these emotions from becoming decisions. When you master tilt, emotions lose their command. They become background noise, felt but irrelevant. This is what transforms trading into calm execution. The market no longer feels like a storm. It feels like a map. You no longer feel like a warrior. You feel like an observer. You no longer need to fight for control. You need only to remain neutral and present, because your edge does not require emotional interference to function. It requires clarity. When you trade from neutrality, your edge operates at full power because you are not distorting it with emotional noise. You see the chart as it is, not through the filter of fear or hope. You follow your plan exactly because there is no internal conflict. You take what the market gives, and because you accept uncertainty, you never feel cheated or betrayed by outcomes. Mastering tilt management is the gateway to true trading freedom. Not freedom from losses, they will always exist. Not freedom from uncertainty, it will always be present. The freedom you gain is the freedom from emotional chaos, the freedom from the internal fight, the freedom from the illusion of control. When that fight ends, trading becomes a calm, precise, neutral execution of your edge. And that is the moment trading finally starts working the way you always hoped it would. In the end, trading mastery isn't about predicting, controlling, or overpowering the market. It's about mastering yourself. When you learn to recognize tilt the moment it arises, you stop fighting imagined threats and start responding to reality. You become the kind of trader who trades the plan, not the fear, the probabilities, not the emotions. Tilt management gives you something most traders never find: emotional neutrality. And in that neutrality, your edge can finally express itself without interference. When you take responsibility for your internal state, the market stops feeling dangerous, and trading becomes a place where clarity, confidence, and consistency naturally emerge.